Hi, this is Randy Finney with Right Side of the Chart, and this is a midday update for Wednesday, April 3rd, 2019. I want to do just a brief overview on the broad markets because we have some movement today, and then hit on some trade ideas. Let's start out with the broad markets here. We have QQQ leading the charge here, up about little better than 1%. And it has taken out now. Today it popped above, gapped above, and it's trading above that recent high. So that certainly you can't take that as anything but bullish right now. And this I want to segue in or digress here for a second into a comment I had. There was somebody quite upset in the trading room that long trade ideas that I haven't, they've been doing crappy lately, to say the least. Is the worst string of I think losses that we've had ever on the site. It's been tough in the last few weeks, and part of that, now had I known more so on the broad market, that we would have been in such a grind here. We're breaking to the upside on SPY as well, but up until really today, when we took out that high from Thursday before last, the post FOMC high, this is what we've been in. We've been in that trading range, if you will. It's been a big and sloppy one, but we've been moving around that key 282-ish level, and again, that's what it's all been about, at least for me. Now, remember, as I'm doing this video, we've just slightly turned the corner to the midpoint of the trading week. We're a little bit halfway through today, and today is only Wednesday. And let me say this now, not that this is a prediction or anything else, but a lot can happen in 2.5 days of trading. This much has happened so far this week. You can see that. So, I've done this long enough. I don't get excited to try to read too much into today's move. My plan remains to watch and see what happens, see how the market resolves this level on a weekly closing basis. I know it's sound like a broken record, but that's been what I've been watching since here. 1, 2, 3, 4, 5, 6 candles. I'm sorry, 1, 2, 3, 4, 5, which all closed on or below that level, and we have one here. We're well above it now, and if you're a betting person, it's like watching, like I said yesterday, a football game in the fourth quarter. If a team's down by 14 points, 2 touchdowns, probably going to lose the game, but there's certainly been plenty of comebacks. So again, now how to trade it, that's a whole other thing, and that's what I wanted to go back to, that my response to that question. Look, I've said this for weeks now. I was bullish heading into the lows, bullish throughout the first half or so of this rally, and then stated this was back at the end of December. This was my uppermost bounce target for the market, and so we've taken it out now, clearly, and from where we go now, I don't know, but just because that level's been taken out, it's not a switch, at least for me, that all of a sudden everything is now bullish in the market because we didn't reverse there. So what I've said for quite a while now, this market can go to the moon without me. I'll trade. I'll continue to trade. I have several long positions. Most of those are commodities. I don't have equity longs or stocks that are highly correlated, like Apple, for example. You trade Apple, you might as well be trading NQ or QQQ because it's one of the largest components in SPY as well. So there's a difference there, and that's, in my opinion, I don't force trades. I don't take trades that I'm not comfortable with because of this, because of what I'm about to cover now, the technicals. We still have, and again, I always say this, divergences in themselves are not sell signals, but they are, especially when you get them on the daily time frame, they are pretty darn reliable. And all the major tops, or at least I believe all the major tops since this bull market started, and even the last one before it, were all preceded by these divergent highs. So right now we have what I call unconfirmed divergence. Why? Because it's not confirmed. We had it right here, but right now the PPO is pointing higher. The PPO, the orange line, and is above the zero line, the signal line, I'm sorry. So we'd have to turn that back down to confirm the divergence. And the way divergence lines work, this is a trend line right here, an uptrend line. Broken backtest. This is not an uptrend line, at least not a price trend line. It's a divergence line, and divergence lines can and will grow up until the point the divergence is negated or taken out. So here's your negative divergence right now. This is what this could look like. As long as we don't exceed that previous reaction high, why prices make a higher high, we could have divergence that could play out in the form of reversal anytime now if we started to turn down, or it could take several weeks, maybe even a couple months. Depends on how much and how fast the market goes up. So that's what that could look like. And you know, here's the thing. Usually when you get within punching distance of all-time highs on an index or a stock, they usually pop it, because what happens, the shorts, the few shorts that remain in this market are probably terrified today, getting squeezed out, short covering. There's just, gosh, there's so much I want to talk about. I wanted to get to trade ideas, but I also wanted to make mention yesterday's trading volume was the lowest all year. You can see that bar right there. Here, I'll zoom in really tight. There's yesterday's volume bar. When I put the crosshairs there, look to the left. That you go back and you don't see any other day this year. Now, somebody asked, what does that mean? Well, here's the thing. It doesn't. My answer was this: it really didn't mean much yesterday. Just because it's low volume doesn't mean the market's going to crater. Where the takeaway from that is, if you have a breakout or a technically significant move, like a breakout of a chart pattern, and it's on low volume, then you have a much higher rate of failure. But yesterday's candle, we closed the day flat. So yeah, I just wanted to bring it up because it was mentioned in the trading room, and it is, it is interesting to note how low volume has been recently as we're getting to new highs. So it tells me this. Most likely a lot of shorts have already been squeezed out, because they would be contributing to that volume if they weren't. So it seems like the sellers aren't stepping in, but there certainly is not a surge of buyers coming in, at least not the last couple days. We'll see how today finishes. The day is young. Let me look at another monitor. No, I'd have to key it in. I can do that now. Bear with me. Okay, I wanted to check that. All right, Interactive Brokers has SPY average volume for the last 90 days, 82.1 million shares. So far today we've done 24 million. So again, a lackluster day. We're not tracking, we're tracking below average volume right now as well. And today is, it's putting us above that range. So what it means to me, it does call this recent move into question, because it's not validated or confirmed by above average volume. Again, is that bearish on face value? No. Price comes first and foremost, in my opinion. Volume is a distant second, but it is important because it's a sign of non-confirmation. But again, unless they reverse it and fade it, you have to take it on face value. So again, to just recap and get off this chart, what stands out to me, we still have potential divergence. And from very low volume and small candles can come you have the potential for a big bearish engulfing if you get a sudden reversal on volume. And the thing about it, you'll notice the big volume days are usually the red days. Anytime you see the bigger volume candles, volume bars I should say, that's on selling. So just something to watch for. And again, I can sit here all day long and talk about this, but let's just see how we finish the week. As far as the official trades, it's somewhat of a relief. On Monday, I called it Black Monday. We had 3, and I don't ever recall in the 7+ year history of the site, or 6+ years, that 3 official trades being stopped out in the same day. So at least we're out of anything highly correlated to the broad market. We still have longs, we have commodities, which I'll get to if I can, if there's enough time in this video, but I just really wanted to focus on the broad markets and show you what's going on there. There's QQQ. The other day I pointed out that we had RSI divergence. Again, that's right here. Let's zoom in real tight. You can see the RSI divergence. Still not confirmed. We need to have the PPO turn back down at this point. But there it is, RSI divergence. And now we also have, or I'm sorry, that's PPO divergence up here, the orange lines. Down here we now have RSI divergence. And again, it's not a sell signal in itself, but you look at the past, the 2 previous major tops over the last couple of years, they were all pointed out in advance. And when those divergences finally played out, remember, we had divergence, that's how divergence works. You had it, here, let's just pull this line here. So you had it right here, you had divergence there, you had divergence there, so it kept extending, and then you put in a near double top, and then finally the divergence played out, and it played out big. And like I say, usually the bigger the divergence, the bigger the drop. So that's it. And most importantly, like I always say, divergence in itself, it's not a sell signal, so that's why we're looking at these 60-minute charts I posted this morning. This is ES, the S&P 500 E-minis. You know, another watch, rinse, repeat situation here. You get these divergent highs. Sometimes they play out for a little drop. That was, you know, small divergence there. We went on and the divergence was extended. Finally, an impulsive break. That's the definition right there of an impulsive move. I often talk about wanting to see that to confirm a breakdown. Back test of the trend line, and then boom, a move down. Here we had a small price channel. We also had divergence at that high, and not every divergence is marked on this chart, but there it was, negative divergence, and boom, little correction. Push back up, extended the divergence, you can see there, and boom, an even bigger drop because bigger divergence. What do we have now? Well, all this divergence that started at that point has simply been extended. It's not yet taken out, and these are the futures. So this would be your really your total divergence right here, and then I have right here the smaller divergence. It's starting to steepen, if you will. You can see the RSI right here and the PPO making considerably lower lows. So not a sell signal, but if we can smash below this line, especially impulsively, it's a pretty well-defined uptrend line on ES, and as well as NQ. These are the same charts I posted this morning. The NQ divergence line, since this morning I had it right there, we popped up. So we basically just, you know, moved the divergence line right now, but it's still intact, not yet confirmed. PPO is pointing higher, but again, these are the two levels I'm watching. So you see that and the ES 60-minute uptrend lines go. That may provide a sell signal. We'll have to see how things look at the time and see if these divergences remain intact, because if we go a lot higher, they'll be taken out, they'll be negated. Although I'll tell you, this longer divergence is still also in play right there from going back to that point, so we can look at it this way. Divergence right there. So, you know, for now, wait and see, you know, since Monday, and I answered several people had asked this question, if I was going to extend the stops on QQQ or the SOXX short, and I said no, because it was only Monday. We took those stops out on Monday, and I said it's just too early in the week, and a lot can happen, and so therefore, those trades, they just need to be, you know, officially, I have to go in and recategorize and put them in the completed trade category, but you know, if there's enough evidence, and it wouldn't just be this. I would want to see something on the daily charts, big red candles, maybe more than one, to convince me to add those back on. Right now, the market has just been too resilient in spite of these small divergences playing out. We're too close to those highs. So right now, I'm focusing on things other than the index ETFs or stocks that are highly correlated. So that'll lead me into the next few trade ideas here. Okay, start here with CPS. This is my favorite. This one's giving me a little boost today. 7.62% gain, and just a nice clean. This is, and again, the reason I highlighted these recently is because they're not. You can see this has nothing to do with the broad market. This stock peaked back here in 2018, and it's coming off a low, whereas the stock market is back to almost to those highs right now. So this is what I'm talking about: sectors and stocks that have virtually no correlation with the broad stock market. I don't know if this is a component of the S&P 500, or actually these are all small cap stocks. I take that back. I believe all of these, if I'm not mistaken, that I highlighted recently, these little auto part companies, are components of IWM. So, you know, this is where I'm comfortable with longs. I'm comfortable with longs in commodities right now, particular commodities, select commodities, I should say. But, you know, it doesn't get much better. And this is a bottoming play. I mean, this is my first target here, and I think this one can work its way up here. But it will likely take the broad market holding up. Although this is not correlated with the broad market, if the major indexes peak out here or peak out soon, put in a double top, maybe pop the recent highs, and then reverse, and we get a big leg down, most stocks will get dragged down with it. So I'm just going to play this one as we go. As long as the broad market holds up, that's I'm looking for a move up to at least 58, maybe a little reaction there, and possibly a move all the way up to 76.91. And again, it's about risk reward. From the breakout point, this one had to that final target, you're looking at an upside potential about 57%. So a lot more upside than the broad market. And again, just better looking technicals at the end of the day. You can put it all aside. The other one's BWA. This one I mentioned as a downtrend line right here yesterday. That was taken out today impulsively. Nice pop above there, 3.32% move. There's the potential inverse head and shoulders. I'm going over this again because I know there's a couple new members in the trading room. They might not have caught this video. That's our inverse head and shoulders bottoming pattern. So we popped above the downtrend line, which in itself is a buy signal. This line may or may not come into play. But if it does, that would be the neckline. So maybe you get a little reaction here. The neckline for an inverse head and shoulders bottoming pattern. And then if we break out, you can see I have just a sold price target there, about 46.50. That's BWA, also an auto part company. ADNT, another auto parts company or store. I'm not even sure what they do. There it is, divergent low, nice, clean. This is what I like to see. Just moving up, another almost 7% gain today, coming up on that first target. Next target's 21.32, and then the downtrend line. And if it hits the downtrend line, I would expect a significant reaction. We have 25.33. That's a pretty good shot up there. But these guys can run. You can see how much they fell. It'd be about a 37% gain to that 21.30-ish target, and about a 64% gain if and when we get up here at about 25.33 and or the downtrend line. So whichever one comes in first, that's where I think you'd be looking at a pretty decent pullback and probably a good chance to book some profits, and maybe, if the market holds up at the time and the sector's holding up, recycle back in. So what I mean by that is, I'll tend to micromanage trades. You hit this first target, you probably get a little pullback. This is how my arrows go. Come up to that 21.32 level there, and then a nice pullback there. At that point, I think the stock would have to base for a while and consolidate. Again, at best, still in a bear market. This is a bear market rally, make no mistake about it. If the stock market wasn't into going on the 10th year with one of the longest economic expansions and bull markets in history, then I'd be looking at this as a longer-term bottoming play, and this would be an official trade idea, probably under the long-term trades category. But as of now, you have to be a little skeptical of the long-term outlook for this stock. Again, the economy works in cycles. This cycle just happens to be one of the longer ones, due to all the liquidity that the Fed and the central banks pumped into the system. So again, first things first, we haven't even gotten to the first target yet. I just want to show you how that may play out, and again, how it kind of ties into what the economy and the stock market is doing if and when we get there. The other ones were TOWR, Tower International. Continues to move higher, coming up on that $23 first target now. Nice, again, divergent low. Like I said, we had a divergent low back here. There was that big pop then. And then WRPT just continues to advance. This was a downtrend line, falling wedge, divergent low, breakout, back test right here, and a move up. And the first target there is 183. SUP, I think did I already cover that one? No, maybe I didn't. Divergent low and sharp rally right up to that first target area of 590. You know what? You can zoom in. You can see a reaction a little bit above that. So let me move that line up there and just tell you, we'll call it $6. This one is at resistance. If you want just quick hit and run trades, you can take profit. The momentum's behind the sector, so we could very well blast through some of these first targets. Otherwise, I have to say, all other things being equal, I favor a pullback here, and then again, if the market can hold up in the sector, another thrust up here to the $7 level. Okay, I've been looking for longs, high and low, trying to find some that fit my comfort level. And this one wouldn't make it on as an official trade idea for two reasons. I've talked in the past. In fact, I recently did a pretty good write-up on the front page about the risk of trading biotech, especially small biotechs. CNAT, biotech company, CNAT Pharmaceuticals. Also, not quite a penny stock, but darn close to it. Just flirted with that $1 level, so very low price. So you add in biotech plus low price equals very high risk, but with high risk comes high return. So I figured I'd mention it again. Unofficial trade idea, just like the ones I just covered. But potential divergence, you can see that PPO starting to curl up. If we can build on this rally here, which I think we can. Now, again, you have to do your due diligence with these guys. Pay attention. I don't know if it says, I don't know if they have any drugs in clinical trials. I don't know exactly what their business model is. You need to look at that stuff, because that's what can knock the snot out of these stocks and cause, gaps like this. What was that, a gap down of 50 something percent. Here's another gap down of 63%. So if that in itself doesn't tell you don't put more into this stock than you're not willing to lose. If you wake up to twice in the last 5 months or so, this stock has gapped down 50% or more. It tells you the nature of the beast here, and it can also run up 50% in a day. How do you trade that? How do you manage that risk? By taking a very small position size, if you do like it. And if you like the biotech sector, what I like to do is sprinkle a little cash. I call it Vegas money in each. Find that top half dozen or so, maybe even a dozen names that you like. Put enough money in that if any one of these stocks, if you wake up to the stock being down 50% or more, it's not going to hurt you. On the flip side, even if that's a very small dollar position compared to your normal position sizes, if this stock plays out, I could see this one coming back up here. I mean, even if it wants to just fill this gap, let's just play that game right here, because that's a obvious target. It's usually a gap backfill. So we have a gap right here around 288. We'll look at the bottom there, 279. That alone would be a 95%, almost a double on your money if that's hit. So that it makes it worthwhile to have a small amount of cash in there, a small position, because if this divergent low plays out, I think that would be my minimum target, and probably look for a move up here. And I think I can see a downtrend line comes off these highs. So yeah, I'm talking $5 or so from $1.40 if this one can pan out. Again, need to do your due diligence. Something's not going well with the company with these two big gap downs, but maybe it was an overreaction. So I don't want to spend much more time on that, because I haven't. I'm just going through the charts. If I decide to personally take a position, I would tell you I would check into that. I can also tell you CNAT, because of what I'm seeing on this chart, too aggressive to make it on the cut for an official trade idea. ZYNE, I posted this one in the trading room recently, right here, right before a breakout of this downtrend line, saying that would trigger an objective long entry. Popped that first day, had a big impulsive breakout, came in back tested, and now hit my second target. First target was 650 or so, and we hit that right away. And then came back tested, and from the breakout point, it was up about 35, almost about 40, close to 40%. So it's at that 775 resistance target. This would be my final preferred target, whether it powers on through here or has a little pullback first. 870, pretty decent resistance. But again, the momentum's behind it. It's also a biotech, fairly low priced, and that's why I passed it along as an unofficial trade idea in the trading room. But again, if you like what you see, trade them. It's sometimes the reason I'll do these videos and I cover so many trade ideas, it's a lot of work to put them on as official trade ideas. Narrow down the exact price targets. I like to adjust targets. For example, if 870 is my final target, I'll have, that's resistance. I'll set my buy to cover or sell limit order at about 8 on that one. I would probably have it, knock it down about 8 cents or so, maybe 10 cents. So about 860 to 862. Why? Because if all eyes are on that level, a lot of eyes, the sellers may start to step in early, and I don't try to eke out the last few pennies on a trade and risk missing a fill, because quite often you'll see stocks reverse just shy of resistance. So that's ZYNE, Riot. I've mentioned Bitcoin recently. Bitcoin's been running lately, and this is an indirect play on Bitcoin. It took out these are levels I've had on this chart for a while. I don't know when last time I posted was, but 428 was resistance. That's been taken out today, which opens the door there. It all depends on what Bitcoin does. I wouldn't chase it at this point. In fact, we're going to get a correction here soon, I think. This one's starting to diverge. It's not confirmed divergence yet. Could make it up to 637. Be careful shorting things like this just because you think they're overbought. Right, it's up another 14% today. This stock and Bitcoin can make oversold and overbought. They redefine it. So don't go shorting or going long or short something just because it's overbought or oversold. At least know the nature of that security. If the stock market hits a RSI reading of 80, I can tell you it's not going to go much higher. If SPY or the S&P 500. But when Riot hits that, it can continue to build on those gains. So there's one to watch. And GBXT, on a related note, that's the Bitcoin ETF. This is a closed-end fund. I have some annotations that should load here. Never mind. It seems all my drawings have disappeared on this one. It's a closed-end fund. What that means is it will trade at a premium or discount to Bitcoin. I trade the Bitcoin futures. Oh, that's what I'm looking at. Darn it, I pulled the wrong one, guys. That's why. That's supposed to track the futures. GXBT with a /. This charting program won't show futures. That's what I trade personally. But GBTC, that's the one I meant to pull. There it is. That's the closed-end fund that tracks Bitcoin, but will trade at a premium or a discount. But it does well to technicals. 498 you can see was resistance there, and the downtrend took the downtrend like back tested, popped above resistance, and that's that same area I showed you was my recent final target on Bitcoin itself. I thought we'd get at least another pullback, but as I mentioned on Bitcoin when I covered it the other day, maybe I'll get to that chart here in a second. It's a powerful basing pattern, so it looks just like this on Bitcoin futures. Figured we'd get maybe one more thrust down, but we popped on GBTC, and you can see if you're in it and want to ride it and want to know where the targets are, I think 667 and change, somewhere around there, and then possibly 882 if this rally gets some legs. Again, this was a powerful basing pattern. It looks like what, 6+ months, and then finally broke above it. Positive divergence at the lows, falling wedge, everything you like to see. And here's Bitcoin futures, GXBT. I've mentioned this year 2 different long entries on this one. It's a setup before this popped right here, bullish falling wedge. All my notes aren't on this chart. I must have put that on a 60-minute chart. Yes, I believe so. There it is. Okay, so back here, said a break of that would trigger a buy signal. It popped hard, ran up to this resistance level, came in and had a couple periods of consolidation, then hit this target here. That was a target laid out in advance, consolidated in a sideways range for a while, and then right here I mentioned a pop above that level would be the next buy signal. Popped above, came back into the range briefly, but then moved up, and I don't even know what happened. I don't follow the news on Bitcoin. Something's going on unless it's all technical, but I did say that even though I thought it would work, it's come up here, hit this level, and then maybe digest those gains. I did mention this as a pretty powerful basing pattern that if and when it broke out, which it now has, bullish. Just at this point, do you want to chase it right there? Look, I wouldn't short it. Be careful on that, but yeah, I think the train's left the station for now. There's really not a whole lot of resistance till up here about 66,000 or so. A little bit of consolidation there, and that's where you'll probably have the first reaction, somewhere in that zone there. So again, it's in what I call technical no man's land, smack between support and resistance. So for me, I'm just a bystander on this one now. Wish I would have held on to it through that, but I didn't. Okay, and to try to wrap this up, I've got a few more names I wanted to get here, trade ideas I wanted to share with you. EMKR, it's a semiconductor, and unlike the rest that are trying to test their old highs, this one's bottoming. It's around $4 a share. Not a super well-defined pattern, but one worth watching. There's a downtrend line. You have a couple MAs coming in, moving averages. You have divergence, at least on the PPO, oversold on the RSI. So there's one that could run. Let me tell you, you have a resistance here first. You have to take out around 442. If that's cleared, I think this one could work its way up to 560 or so. Not my favorite. It's not going to make it on as an official trade idea, but again, one that I've come across in the charts the last couple of days. FLL, let's see. Ooh, that's low price. It's a casino, resort and casino stock, $2. You can see a downtrend line wedge. Let me show you the divergences. So speculative trade, thinly traded when you look at these funky looking candles, and I do not have the targets listed on this one. So I'm going to move off that, and I'll just keep an eye on that one. I'm just going off a watch list that I have down below some of the names I found. XAL looks interesting. If the stock market does go on to break out to new highs and keeps going, we have a potential inverse head and shoulders pattern here. So this would be your left shoulder, your head, your right shoulder, and if we come up here, this would be your neckline. And to take the measured move, you take the widest part of the wedge. I'm sorry, the pattern from the head up to the neckline, and then you add that to where it breaks out. And that would take the airline sector back to that 2018 high right there, early 2018 high. That, what could cause that to happen? Well, let's say the market breaks out, but let's say oil starts to fall. That would be bullish for the airline sector. They don't like high oil prices. Fuel's their second largest cost behind salaries. So there's one to watch. Still work to be done on that pattern, so I'm just kind of throwing it out there in advance. And you can't trade XAL directly, but you can trade the individual airlines, so I'll be keeping an eye on those depending on what happens in the markets in this sector going forward. URGN, Eurogen, looks like this must have been a trade idea before. Divergent highs. Here's an example too of how these divergent highs not only play out, but they can keep expanding. Here was divergent high 1, 18% correction. Divergent high 2, 22%. Divergent high 3, didn't measure it out. But divergent high 4, that one certainly stuck, and that's still to this day the trend that it put us in this bearish trend. So really, you can look at it one way: 4 smaller divergent highs, but it was one consecutive larger building divergent high that finally played out. And when it did, it's played out for a drop so far of about 50%. Cut that stock in half. Looks like I had calling for a 31% correction. That would have been back here somewhere, and I had these two targets. This was my final target, and looks like that was just hit. Now I'm doing this because the stock's come full circle. Those divergences have played out, and this stock now has a divergent low, and it briefly dipped below support. And this is a common theme of this market. It loves to run support and stops. That line was a pretty decent support level. That line is at 36.97. Shows you why, for example, I'll put my orders to cover a little bit above the actual support level. So call it about $37. So we dipped below it, but we're above it now. So there's one to watch. Again, it's a biotech stock. At least it's not a very low price stock. Looks to be a little more steady as far as, I don't see any 50% gaps in this chart. And you're usually not going to see that gaps that large on a $40 stock. Next one up would be Radius. There's one I've traded in the past, shared as a trade idea in the past. This one just broke support resistance at 2060. You can see that resistance line right there. You can see the divergent low right here at the lows. That was bullish. Wish I would have had it on my radar back then. But either way, it doesn't look like there's much in the way here for this stock until about 2466 and possibly beyond. So there's one to watch. PPO looks bullish, turning back up on the 0 line. Let's see, Tandem. I've highlighted this one a couple times recently in the trading room. It's just walking the line here. I was bullish and long this one back here in the low $3 range or whatever. I had these first couple price targets, a potential third target. It more than exceeded that. So this is where I was highlighting it here in this divergent low, and that sucker has run 3,000, over 3,000%. But again, I think it's come full circle. just as the case was made for a long back here with the bullish divergences on the daily time frame, and a case right here we had a small divergent high, and I guess these three targets look like we hit that first target, almost hit the second target there, but the bigger picture is this stock has an uptrend line off the lows right there and this big large wedge pattern. So this would be almost like a trend trade in reverse, or at least a short side trend trade. In other words, if we get a definitive break here, it's really holding this support. I highlighted this the other day. We have gap support there about 60.15, the top of the gap. If we break down from the wedge, we'll probably have a quick backfill of that gap down to about 52.24. Maybe a back test, maybe not. Hard to say right now. This trend indicator is still bullish, so possibly. I'm keeping an eye on this one, and that's my first target, 52.24, and these are the next two targets. So this one's on watch for potential short entry and or official trade. GDEN, Golden Entertainment, gambling. So this one, you're going to take a gamble on this one. You don't want to wait for a break of the downtrend line. You had a nice clean divergent low right there, positive divergence, resistance at 1631, but more important is that trend line above it. If that gets taken out, I see some minor resistance here around 1872, but I think that one could climb up here at about 2015, maybe even the 22-ish. Move that line a little higher, about the 2225-ish level. SAFM, this one's come full circle. This was an active official trade back here. I can't remember exactly. I know we went long based on this divergent low, either before or after the wedge breakout. We quickly hit the first target. I guess that should be down here. I think that was there. And then after the first target, it came down and just barely clipped our stops. I mean, this is a story of at least my life recently. And I'll tell you, I have no idea. I mean, no doubt, I should say, that it is the algos have wised up in recent years. You know, most trading on the markets nowadays is done by the high frequency trading, algorithmic trading programs, the algos, electronic trading, and they know where the stops are. This was a well-defined support level. So what they did is they clipped our stops. They ran it one more time. After, again, we hit the first target, so it was successful in that sense, unless anyone was holding out for T2 or T3. And I believe I suggested taking some profits there at the time. And that stop was hit, but here's where I'm going. After clearing out the last of the stops, once again pulling it just below a very well-defined support level where any reasonable stop should be placed. Look at that explosive move, and it went on to hit the second target and eventually the third target here, my final target of 128. That would have been probably a 30+% gain. However, the reason I'm highlighting it now is more so the fact it looks like it's come full circle with a nice fat negative divergence, or divergent high, I should say, a fat divergent high. You have a trend line here you can watch, but that was also resistance right here. Pretty well defined resistance level, and I like what I see so far because this is a false breakout. This is what I think the stock market will do if it breaks new highs. Pop above it and then turn back down. We'll have negative divergence, and fewer things in trading and investing are more bearish than a failed breakout. So this one would probably head back down. At this point, my targets seem to, they produce enough reactions. I would just say you do it in reverse. Although this T2 level, the line was actually at 116.60, so you'd want to cover a little bit above that. And yeah, let's just say right now that'd be my preferred target, about 116.60. I'm not sure if we're going to get much more unless the broad market takes a big leg down, in which case this one will probably come back down and at least hit this level here, 110.50. Okay, last one, long video. For that, again, I probably should have broke it down into equity market and then trade ideas, two separate videos. I'll try to make a point to do that in the future. But trade ideas, here's another one. And I said it at the time, they got us on the stop. I was very clear this chart is still very constructive. I'm talking about coffee futures, and or the ETN Joe. ran our stop, and I said next buy signal would come on a break of this downtrend line. That has occurred today, so we've taken that out. Pretty nice move in coffee, and that's nice green candle so far. The daily, a little work to be done, and I'll have to. I want to cut the video short. I'd have to pull a chart of the futures. I want to take a look at that, but remember, the case was made on the daily and 60-minute charts of the future. So looks good, but I'll revisit it. Let's just leave it here. I'll take a look at the futures and see if there's enough evidence to warrant adding this one back as an official long trade idea. But that's where my focus has lied. We've also been highlighting wheat, which is an official trade idea, BAL, cotton, things like that. And again, I just think the risk reward is more attractive than the market. I don't think you're going to, you have the chance to lose a quick 10-20% downside on these. They seem to appear to be bottoming, whereas that is still a possibility in the market at this point in time. Okay, we'll wrap it up here. This has been Randy Finney with the Right Side of the Chart. I hope you enjoyed it.